The Innocent Spouse Relief, Domestic Violence and the IRS by Port and Sava, Attorneys at Law. Innocent Spouse Relief provides a way for a spouse to avoid paying additional taxes if they can prove they didn't know, and had no reason to know, about errors on a joint tax return. The Innocent Spouse Defense is a provision under U.S. tax law that allows one spouse to be relieved of responsibility for paying tax, interest, and penalties if their partner improperly reported items or omitted items on their joint tax return. This remedy is particularly important for divorced or separated individuals who might find themselves pursued by the IRS for their ex-spouse's tax issues. Innocent Spouse Relief. This relieves a spouse from additional tax owed if they can prove they did not know and had no reason to know that there was an understatement of tax when they signed the joint return. Separation of liability relief. This applies to taxpayers who are no longer married, are legally separated, or not living together. Equitable relief. When neither innocent spouse relief nor separation of liability relief applies, a taxpayer may still qualify for help if it would be unfair to hold them liable for the understated or unpaid tax. The Innocent Spouse Defense can protect you from being unfairly penalized for your ex-spouse's actions. Also, what people don't realize is that tax returns must be produced in a divorce. If a judge is aware of a crime, they must report it. This includes tax fraud. The IRS provides specific criteria for determining whether you qualify for this defense. Joint tax return filing. You must have filed a joint tax return with your spouse. Joint filing is necessary because it creates joint and several liability, meaning both spouses are individually responsible for the entire tax debt. Erroneous items. The understatement of tax must be due to erroneous items of the other spouse. Erroneous items include unreported income or incorrect deductions, credits, or property basis claims. Lack of knowledge. You must prove that at the time you signed the joint return, you did not know and had no reason to know about the understatement of tax. The IRS considers several factors to determine whether you had reason to know, such as your involvement in the financial affairs of the marriage and your level of education and business experience. Inequity. Given all facts and circumstances, it must be unfair to hold you liable for the understatement of tax. Abuse and financial control can significantly affect your eligibility for this defense. The IRS recognizes that these factors can limit a spouse's ability to question or understand the contents of a joint tax return. Abuse. This includes physical, emotional, or mental abuse. A spouse who is subject to abuse may be too frightened to question the accuracy of a tax return or confront the other spouse about financial issues. Financial control. This occurs when one spouse exerts complete control over the financial resources and decision-making process in the household. This can prevent the other spouse from having access to financial information and understanding their joint tax liabilities. Classic innocent spouse relief applies when all four of the following conditions are met. Joint return. A joint return was filed for the tax year in question. Understatement of tax. There is an understatement of tax due to erroneous items of the other spouse. No knowledge. You did not know and had no reason to know that there was an understatement of tax. Inequity. It would be unfair to hold you liable for the understatement of tax. If you believe you qualify, follow these steps. File Form 8857, submit IRS Form 8857, request for innocent spouse relief. You can download this form from the IRS website. Provide documentation. Include any documentation that supports your claim, such as divorce decrees, affidavits, and financial records. Respond to IRS requests. Be prepared to provide additional information if the IRS requests it during their review. If you don't qualify, you might still be eligible for equitable relief or separation of liability. For example, it may apply if you did not know and had no reason to know that the tax was understated or unpaid, and it would be unfair to hold you responsible. Separation of liability, on the other hand, is available if you're divorced, legally separated, or living apart for at least 12 months. This allows the tax debt to be allocated between you and your ex-spouse based on your respective involvement in the erroneous items reported on the return. Act quickly. If you suspect tax issues, act quickly to seek advice from an accountant or tax lawyer. As divorce attorneys, while we may help spot the problem, we can't assist you with the IRS. We will work closely with your accountants. Your divorce lawyer and your accountant should be working together to protect your rights. Don't leave either in the dark. And again, make sure that they are talking. Call Port and Sava at 516-352-29999 for a free 15-minute telephone consultation.